Hey everyone, and welcome to today's Explainer. I am absolutely thrilled to guide you through what is frankly a fascinating economic story unfolding right now. We are zeroing in on May 2026, which is a pivotal time for four major Middle Eastern economies as they navigate some seriously complex regional headwinds. Now, you might be wondering, why does this matter to us? Well, as these nations actively pivot away from oil, the health of their private sectors has a massive ripple effect on global trade and supply chains. It's a tale of two realities right now. On one hand, we've got nations that are absolutely thriving and expanding, and on the other, we have nations fighting tooth and nail to get back to stability. So, how do we make sense of these divergent recoveries? We're going to map it all out today, breaking down the exact data and the hidden drivers shaping this incredibly vital region.
Okay, let's dive into this and lay out our roadmap. First up, we're decoding the PMI data. Second, we'll look at the growth leaders, Saudi Arabia and the UAE. Third, we'll contrast them with our recovering markets, Egypt and Kuwait. Fourth, we'll unpack the shared economic challenges hitting the whole region. And finally, we'll wrap up with the cautious optimism looking ahead.
All right, Section 1, Decoding the PMI data, the baseline for economic growth.
Before we start comparing countries, we absolutely need to understand the metric that dictates our entire economic story today. It's called the Purchasing Managers' Index, or PMI. Think of this as the ultimate economic thermometer for a country's non-oil private sector. Now, the absolute most crucial thing to remember here is that magic number right in the middle, 50.0. A score above 50 means the private sector is expanding, it's growing. A score below 50 means it's in contraction, so business activity is actively shrinking. That 50-point threshold is literally the ultimate finish line separating economic expansion from decline. Keep that number locked in your mind as we go through the data.
And this brilliantly illustrates our starting point. Look at May 2026. Saudi Arabia scored a 52.8, and the UAE hit 52.6. Both of these powerhouses are sitting very comfortably above that neutral 50-point threshold. They aren't just surviving right now, they are firmly in the growth zone. But that raises a big question. How exactly are they pulling this off amidst so many broader regional disruptions?
Which brings us to Section 2, our growth leaders, thriving amidst pressure.
So, while both of these nations are growing, the engines powering them are actually quite different. In the UAE, roughly 21% of surveyed firms reported higher activity thanks to some incredibly proactive measures. We're talking expanding projects, heavy government support, and just overall higher market demand. They basically have their foot firmly on the gas pedal. Saudi Arabia, on the other hand, well, they climbed up to that 52.8 mark primarily because of some incredible economic shock absorbers. They are experiencing a powerful return to normal operating conditions after facing earlier regional disruptions. Basically, they took the hit, stabilized, and bounced right back.
Actually, there's a fascinating microtrend happening within the UAE right now. Back in April, Dubai hit a staggering 55-month low with a reading of 51.6, but by May, it had already rebounded to 52.0. This sort of localized resilience is a really perfect example of a gradual, highly determined strengthening within the broader national economy.
To validate this strong trajectory, we've got some excellent insight from Naif Al-Gaith, the chief economist at Riyadh Bank. He points out that the latest data firmly supports expectations that Saudi Arabia's non-oil economy is going to maintain its positive momentum throughout the rest of 2026. This isn't just a one-month fluke, you know? The underlying fundamentals point to sustained, real expansion.
Now, what's really interesting about this data is the upward trend. Yes, okay, in May, both Egypt at 47.1 and Kuwait at 47.2 are technically still in contraction. They're still below that magic 50 mark. But compared to April, both nations saw their numbers climb. This tells us that while their economies are still shrinking, the pace of that decline is definitely slowing down. They are steadily, day by day, marching back toward the growth zone. To really understand why Kuwait is still under 50, we have to look at the massive logistical hurdles they've been dealing with. Kuwait has faced some severe headwinds lately, most notably the closure of their border with Iraq, along with the very real ripple effects of ongoing regional conflicts. I mean, it's incredibly hard to grow your private sector when your regional supply chains are literally blocked off by a barrier. It weighs heavily on new orders.
But there is absolutely light at the end of the tunnel here. Andrew Harker, the economics director at S&P Global Market Intelligence, observed this specific trend and noted that these weaker rates of decline, when combined with stronger business confidence, suggest Kuwait's non-oil private sector could return to true growth territory in the near future. The business confidence is returning way before the actual revenue does, which, if you follow economics, is a classic leading indicator of a real recovery.
All right, Section 4, Shared Regional Economic Challenges, the Universal Headwinds.
Because, we can't just look at these economies in a vacuum. Businesses across the entire Middle East are battling a very unified set of hurdles right now. Geopolitical tensions are constantly disrupting supply chains. Everyone, and I mean everyone, is feeling the pinch of higher fuel, diesel, and electricity expenses. Profit margins are just getting squeezed. And interestingly, increased automation is actively slowing down employment growth. Even our growth leader, the UAE, saw its weakest employment growth since October. Turns out, when input costs get a bit too high, businesses are more than happy to let robots handle the softer demand.
Which brings us to this incredibly powerful number, 5. That represents the 5 consecutive months Egypt's non-oil sector has been stuck in contraction. Why? Because they're feeling these shared cost pressures more acutely than almost anyone else in the region. In May, Egyptian businesses saw their input prices rise at the absolute fastest rate since January 2023. Imagine trying to grow your business when your baseline costs for fuel and wages are suddenly skyrocketing at a multi-year high. It's tough.
Yet despite these intense, very real struggles, we have to look at the mindset of the business leaders on the ground. David Owen, principal economist at S&P Global Market Intelligence, reframes this perfectly. He points out that the longer-term outlook remains surprisingly strong in May. This suggests that businesses still view these current challenges as temporary bumps in the road, and they expect growth to bounce back quickly. The prevailing attitude across the board isn't defeat, it's endurance.
Finally, Section 5. The cautious optimism ahead, looking toward the rest of 2026.
So, based on all the data we've just unpacked, here is the clear, multi-step journey these markets are taking for the remainder of the year. Step 1. They absolutely have to carefully navigate these immediate cost and wage pressures. Step 2. They must continue to absorb the shock of ongoing geopolitical tensions, much like Saudi Arabia has already successfully done. And Step 3. For our recovering markets, it's all about maintaining that upward momentum to finally push their non-oil private sector activity right back past that critical 50.0 growth threshold.
So here's what I want to leave you with as we wrap up today's explainer. We've seen the raw data. We know the shared regional challenges. As tensions persist and automation fundamentally reshapes the labor market, which Middle Eastern economy is going to adapt fast enough to truly dominate the non-oil sector for the rest of 2026? Will the UAE's proactive projects keep them firmly on top? Will Saudi Arabia's incredible resilience pull them ahead? Or will a recovering market like Egypt or Kuwait surprise us all? Thank you so much for joining me to unpack all of this today. Keep your eyes glued to that 50-point threshold, and I'll catch you next time.
OIC Today. Leaders of today, leaders of tomorrow.